David Jones, and Chief Market Strategist at IG. Oh no, I think there's still a lot of activity in the FTSE 250. If you look at the indices for a start, the FTSE 100 versus the FTSE 250, the FTSE 250 has performed much better in recent years than the FTSE 100. So, and the FTSE 250, you could argue, the shares within there are a much truer reflection of the UK economy. You know, so you have in the FTSE 100, so much of their income is derived from outside of the UK. It's really a global index, the FTSE 100. So FTSE 250 shares, lots of high street names, lots of names that we'll know, and many people would see them as maybe slightly less volatile, you know, because they're not buffeted so much by what's going on internationally. It's a much more UK focused part of the market, so they tend to be a bit quieter. We tend to see, you know, maybe more sustainable trends with less volatility. So FTSE 250 shares and beyond, you know, are still popular with plenty of our clients. Not within the 250. I think within the 250 they tend to be, you know, fairly widely traded. You know, you will get, you know, clearly on the 350th biggest share in the stock market, you're going to have a larger percentage spread than you would do on Rio Tinto. You know, so clearly that is something that needs to be taken into account. The spread will be a little bit wider to reflect less liquidity, but not necessarily a lack of liquidity. I think it's only when we start getting down to the really small caps that you will see, you know, quite wide spreads reflecting the lack of volume in the underlying market. But with us, we quote down to a market cap of around about £10 million. You know, so if there was a real tiddler, you could still spread bet on it with IG.